You all know how Bitconnect works, or you should have if you've seen my process. Basically, you invest money with them, and if you were to lend $10,010, they pay you 0.25% a day guaranteed, and then whatever the software of the system is making, which typically averages out to be around 1% per day, right? And that runs for 120 days, and then you get your money back. All right, so let's look at my sheet here. So what I did was I went to, let me show you what I did. Sorry. So here's the average payout for the last 5 days for BitConnect, right? Phenomenal. This is not, since I've been in, it's only been 2 or 3 weeks, but since I've been in, this isn't really normal, I don't think. I mean, the average is 1.5. I mean, this was yesterday. That's today's payout. I mean, you look at the average, it's a lot higher than standard. It's 1.27, 1.28, something like that for the last 5 days. So but let's go last 6 months. So what I did is the last 6 months, the average is 0.96, okay? And if you did a $10,010 loan, 120 days, calculate that, okay? Your profit would be $14,534.52, which for ROI of 145.20, and then a profit, well, with your principal back that you get back at the end, you get a capital release at the end of the 6 months. I'm sorry, the end of the 120 days. That would be $24,544.52 that you would get back. That's an unbelievable return for sure for such a short period of time, right? So the question is asked, this is a scam, it's not real, this is not possible. Well, math never lies. So let's do some more math from their side of it. All right, so this details what I just said. $14,534.52 in interest. That's 1.21, because remember that's not 0.96% daily from the that they were paying out on average, and then the 0.25 that you're guaranteed. So I normalize that into 1.21 a day. And then the capital release after 120 days, you basically receive back $24,544.52, okay? All right, let's get into their side. And this is where it's interesting to me. First of all, they kept your Bitcoin. They use that to trade in the market, but you never get that Bitcoin back. Through the blockchain, you have transferred it to them. They transferred you BCC or Bitconnect tokens. They own that Bitcoin, never to be seen again by you unless they exchange you back out, right? Well, that Bitcoin that they received from you is worth $28,175. That's the value of Bitcoin today versus what it was, when you first got in and gave it to them. It was the 4.29 Bitcoin was worth $2,330 per Bitcoin. So that was $10,010 in Bitcoin on that date. Here we are 4 months later. That value is $28,000. All right, that already is more than what they paid you back in total. All right, but here's the magic. Okay, when they exchange that 4.29 Bitcoin for tokens, they gave you 173.87 Bitconnect tokens. Okay, because they were $57.57 at the time. Well, 120 days later, because you then lent that back to them to trade. 120 days later, they only have to pay you back 39.58 Bitconnect tokens because the tokens today are worth $252. I didn't put that on here. I should have. Sorry. The token's worth $252 today. So to pay you back $10,010 when your balance is due back to you, the capital release date, they only have to give you 39 tokens back, but you gave them 173 tokens, which means they're holding the value of 134 tokens that are now worth $252, which is a gain of $33,961. So they gain almost $34,000 in value over 120 days off of the money you gave them. Then you factor in, and this is the part that is somewhat speculated, that assuming that the split is really a 75-25 split on the trading profits, they've made $43,603.56 off the trading during this period as well. So the grand total is off of your $10,000, they made $105,740 and paid you 24,544, and actually only 14,000 of that is interest. None of this was originally their money. So your return is 14,000 on your 10. Their return is 105,000 on their nothing. They didn't put any money in, you did. And this is somewhat exciting to me because this formula, the principles of this are somewhat sustainable. First of all, they're making money hand over fist. I mean, this is a very simple concept to grasp of how much they're making versus how much you're making. And you say to yourself, is this real money? Because who's going to buy these $33,000 worth of tokens? You know who is? You are. Because you know what you're going to do? You're going to keep 10,000 of this money maybe, and you're going to say, you know what, I'm going to do another loan for $14,000. But when you do that loan for $14,000, they're going to give you the token equivalent, which would be $252 per token divided into that 14,000. You know, you understand what I'm saying? So you're going to pay the new price when you reinvest, and everyone that reinvests or anybody that's new pays the current value of the token. But over time, the token is going to go up in value because Bitconnect controls 75% of their tokens from the mining process alone, and then you loan all the tokens to them when you do loans. So at any given time, I don't have math for this, but at any given time, they're probably holding between 75 and 90% of the tokens on their system, which means that they can basically somewhat control the value of the token. I mean, it's tied to Bitcoin because you want the exchange of the Bitcoin dollars to match the ratio of that versus how much the Bitconnect coin is. There's some math in there that you want those ratios to stay pretty close to the same. So as Bitcoin goes up, their token goes up. As Bitcoin goes down, their token goes down. But the point is, over the course of 120, 239, 299 days, typically their Bitconnect token is going to be worth more than what you paid for it when you got in. On top of the fact that they own the Bitcoin that they get to trade and get the appreciation from that, and then they're getting 75% of the profits of the trading that they do with your Bitcoin. By my estimation, this is a sustainable model, at least for as long as Bitcoin is appreciating. And I think if Bitcoin slows down, I mean, obviously right here, they have enough reserves. I would imagine that if you ran into a bad spot, you could probably just cover it up with all the money you've made, right? I mean, there's $2 billion worth of Bitconnect coin that they probably hold somewhere in that range. So there's money there to float while the market moves around. So if Bitcoin was completely crash and go to zero, then I think this thing would pretty much crash and burn with it. But if Bitcoin continues to be viable and over time continues to rise, I think the program will be here to stay, mathematically speaking. I don't know who runs the company. The people could run off with all the money tomorrow, but why would you? You're making $100,000 off of other people's $10,000 with no money invested of your own, other than whatever it costs for you to mine the coins. So this is eye-opening numbers, eye-opening math, and it changes my view on them to some extent. When you really sit down and put the math together, this is a tremendous mathematical equation that's super profitable for them, and I prefer that because I don't want to make their 105. I want you to be around for 5 years to pay me the 1% a day. That's all I need from you.